All right, welcome to bullwaves.org. This is Enda here. This is the homepage of bullwaves.org. If you want nightly Elliott wave analysis, if you like what I do, get over to bullwaves.org, check it out, join the mailing list, and we'll see where it goes. Or just join straight up, be a member, and you'll see me every night. Well, you won't see me. You'll see my writings every night. Okay, let's do something. How are you all? Hope you're all well. It's been a few weeks since I've been here. I haven't died or anything. I just didn't really get around to a video last week. Still did the nightly updates though. So if you do like nightly updates, head over to bowlers.org and join, become a member. Okay, I'm going to kind of zoom out a little bit. I think this evening. It's 5 p.m. on GMT. So it's lunchtime in the States, or in the US, or in New York anyway. So I think it's time. I think we've had enough today to maybe make some sort of stab at what's happening. This is a daily chart. Now, I commented this week about on one of the updates about the incessant death of the dollar theme that's kind of bubbling and boiling out there. Seems like an information operation on my head, in my mind. But nonetheless, it's there. The idea seems to be, that the dollar is dying and so on and so forth, and Chinese are going to create an alternate currency, gold-backed currency. No, they won't. No, they won't. The Chinese are if you can see the size of the blatant outright inflation that China engages in through its monetary policy committee or whatever they call it. The way they stoke inflation just by the push of a button. They tell people to borrow money, and they do it. It's just the Chinese yuan won't be the reserve currency of the world. It won't. And look what happened last year. This is what people are such short memories. This in the 6th of January 2021, the euro dollar stood at 123, and the dollar gained strength throughout 2021 into the end of September 2021 at 95. So it gained 25% in 9 months, or 20% in 9 months, and suddenly there's a little payback on that rally, or that dollar rally. There's a little bit of a payback on dollar, and suddenly the dollar's going to die. The dollar is still up, 12% or 13% on, January 2021. Or sorry, that's a year and a half, whatever. Anyway, it's still up 12% on January 21, and suddenly the dollar is dying. I just don't understand it. Like, what's that psychological condition? Mass formation psychosis. It's an information operation. Now, I fully expect there to be a dollar rally pretty soon to finish off a second wave here. Now, there will be I think a euro dollar is probably going to strengthen throughout the year. If this pattern, actually plays out the way I think it will, but I think it'll probably strengthen throughout the year. I think we'll finish off a C wave back above 125 again. So that's a big A, B, C sideways or expanded flat correction, to be technically correct. But I think we'll finish that C wave somewhere up about 126 or 128 maybe, or something like that. And then we'll have a massive US dollar rally again. So I don't think we're there yet, though. I think we've got wave 1 done, and we're probably going down in wave 2, and that's not complete just yet. I think we'll probably fall back towards par again, 102, 101, somewhere around there, to complete a second wave. Go to the 4-hour chart here. You can see I've got, well, the labeling is a little bit different, but I've got a wave 1 topping out at about 110, and then we've got an ABC scenario playing out here. Wave C still has to come on stream. We're not there yet. I had thought that was the initial move lower. Excuse me. In wave C, but that just didn't materialize. we should have a C wave decline down towards that. I'm looking about 102. That'll be about 50% retracement level. 102.80 is 50%. A little bit lower. 62% retracement will bring us back to 101. That'd be a nice round number to finish on. A second wave correction, and second waves traditionally, you would expect them to be quite deep. Quite a deep retracement of the previous rally, but like I said, it hasn't reared its head just yet. I do expect it, but we'll see when we get there. Here's the short-term chart with an alternate account on it, but I'm kind of discounting that alternate account, to be honest. The action over the last couple of days has been, sideways, but this week in general, it's been pretty sideways. It still looks like that we have a B wave top in process. We haven't confirmed a turn down yet, so wave C is still yet to come. And when it does, I expect those headlines, those US dollar is about to die headlines, to disappear pretty quickly. I was struck this week with the amount. It's I don't know. Was the CCP involved in this? Were they paying people to put out these articles? Quite possible. I expect that barrage of negative sentiment towards the dollar probably marks more or less the top of this B wave, and then we'll move down into wave C. We'll see when we get there. It's going to come pretty soon. And once we start moving back below, let's say these pivot lows here, 107, let's say, I think that'll pretty much confirm wave C is underway. Okay, let's get on. Pound dollar. This is actually the weekly chart here in pound dollar. I'm looking at a second wave rally in cable. So I've got a wave 1 down, and then this ongoing second wave rally is where my focus is at the moment. It looks like, there's the wave 2 rally, if you can picture that. So that's initial rally off let's say the October lows last year. That's counted as wave A, and I'm saying that's 5 waves up. You could count it a little bit differently, but I'm suggesting that that's probably 5 waves up in wave A. We've got a 3-wave correction, wave B still underway, and you can see how this mirrors the count in Eurodollar also, like a B wave top, expecting a C wave decline. When that C wave decline comes, I would expect wave C to break below 118 again. That's the wave A low. So back below 118, bottom out in wave B, so that's 3 waves down in wave B, and then rally again in wave C. So you can see the larger long-term picture there. Here's the hourly count. There's the possible B wave, 3 waves up in wave B. So we've got wave A up, wave B down, and then 1, 2, 3, 4, 5. A little bit of a reversal this week, but nothing impulsive just yet. So, the count in wave C might drag on a bit more. Maybe it's an ending diagonal with a bit of teeth on it. Maybe it's got wave 3 up here and wave 4 down here, and then wave 5. I don't know. The action is quite, in general, it's too overlapping to, let's say, to allow any other sort of a bullish interpretation just yet. I still am expecting, an impulsive decline, a break of these pivot lows here, especially a break of that previous wave A high. So we've got 122. That'll be the key level, I think, in my head. If we see a nice formation 5-wave decline below 122 and then a 3-wave correction higher, that will be the indication that wave B is done and wave C is underway. And keep in mind, I'm looking at about 118, 117 probably to complete this time. Maybe even a bit lower. Who knows? Okay, this is the opposite possibility here for dollar yen. Looking for a rally, looking for a 5th wave rally. So in the Atlantic pairs, we've got this C wave decline that I'm looking for to begin. In the Pacific pair here, the dollar yen, I'm looking for this fifth wave rally to kind of counteract, or let's say to mirror that alternate or that other the other pairs. I think we should break above 151 again. I remember, back in way back when, back in 2020, in December 2020, I was, talking about the completion of this triangle, this long sideways triangle, and I was expecting a big rally in wave C. And again, there was the old death of the dollar scenario, and we had this massive spike, this huge rally from 102 to like a 50% rally in dollar yen. 50%. And, now suddenly we're still holding, 25, what are we at now? 132. Back before that rally happened, it was 102. So we're still 30 yen above that position, and suddenly the dollar is about to die. I just don't get it. Anyway, that's markets for you. Rational to the hilt, eh? This is the possible count that I'm working with here. A wave 1 up, a wave 2 down. Looking for wave 5 here. An initial higher low. We're still holding higher lows, so as long as we continue to hold higher lows, then I'm tentatively leaning towards this bullish count, but we do need to continue to hold this upward trajectory. It's come under pressure this week. There's no doubt about that. Possible wave 1 and 2 to begin wave 3 up. And we have recovered slightly into this morning's trade. I think we spiked again today. So we could be looking at a wave 1 here. This is it might be a roundabout wave 1, but or it could be a series of 1-2s. Who knows? For the moment, I'm still expecting a clearer 5-wave rally in wave 1 of 3. This would be wave 1 of 3 of 3 of 5, if you can follow that. A break above 133.70 again, that will give us pretty clear indication that we are actually beginning. Excuse my hesitancy here. We are actually beginning that large third wave up. So, we're not there yet. We are holding higher lows. I think the incredible bearishness towards the dollar this week is probably marking a regime change here, so a trend change. So let's see if that takes hold next week. That's the idea anyway. So we'll see whether it happens or not. Okay, so here is the daily count in the Dow. We've got a leading wedge, wave 1. We've got an expanded flat, wave 2. That wave 2 high was we had a pretty good result off that wave 2 high. So since December, we had a series of 1-2 declines. We haven't had that, capitulation yet into wave 3. So, are we there yet? Is the question. No one knows the future, but I'm looking at the patterns and I'm suggesting that we are actually tracing out a series of 1-2s here. So this would be you could see something similar back in, January 2022. So we had an initial decline, a nice powerful rally, initial decline, nice powerful rally, but that all led to a significant cascading set of declines into September, October last year. So we've had a nice spike rally out of that. That was a wave C, and now here we are again. The pattern is accelerating lower, correcting higher, accelerating lower, correcting higher. We have yet to have that capitulation rally. Capitulation decline. That would be an acceleration down in a third of a third wave. So that is the expectation. We'll see what happens in reality. Here's the set of 1-2 declines that I've been looking at. We have, 78.6 retracement in wave 2. We're probably we are pretty close to 78.6 retracement in the lower degree wave 2. We will see whether today's trade holds below this week's high. That's yet to be decided. I would hope so, and then we would begin a nice impulsive decline next week. Let's see if we go this the hourly chart. Wow, we're kind of just holding on throughout this morning's trade. This is very inconclusive just yet. There's been nothing. You could say, I suppose, that it's been quite a sideways corrective trade to the upside. So maybe it is a small lower high building here. We will see. I'm looking at that wave A low, so that'd be 32,770. Or sorry, wave A high, 32,770, to indicate that this correction higher is actually done. So it'd be a smaller degree, or a nested head and shoulders pattern here. If you could see that around wave A, B, the head formed by wave C, and then wave 1 and 2 forming the right shoulder here. That is what I'm looking for. Yet to happen. So, next week is another week. We'll see. Just track it day by day. Here is the gold pattern. You can see long term, I am looking for a long rally, a large fifth wave rally. This week has been quite impulsive, quite a good look to the move. We haven't pushed out to new highs yet, still holding below, but the extreme bullishness that is on display in gold right now is a contrarian indicator that you should be wary about, at least. So, I would watch this internal low here from what date? Late February. Late February lows here, about 1800. I would watch for a reversal back towards that level again. So let's go to the 4-hour count here. You can see a possible expanded flat wave 2 is what I'm looking at right here. Still, there is I know, declining probability, but the possibility of a climb back below 1700 is still there in a larger second wave. So just don't rule that out in your calculations just yet. We have, let's move this on a bit. Forgive me now. Move my Fibonacci grid. There we are. Stay there. So we have a 50% retracement, 62% retracement. That would bring us back below 1800 again. So that would be the alternate count wave 2. So the initial, the main count at the moment is a little bit more bullish, but still allowing for that wave C decline in wave 2. So we've got a possible wave 1 up, and then an ABC expanded flat wave 2 correction. You can see here on the short-term chart, we were looking for, or I was looking for, that triangle pattern to close out. First of all, that was the alternate count, and then it got triggered to be the main count into wave 5 of 1, with a possibility of wave 2 now beginning. You could read that in two ways. You could say that this is an expanded flat wave 2 also, so that count is, it's actually quite valid too, depending on what way you want to look at it. All three counts there are calling for a C wave decline. The mildest would be a break of 1900 again to complete wave C of 2, or wave 2 in general. The most severe would be on the 4-hour count here. The alternate count for the 4-hour, or for wave 2, would be a break of 1700 again in wave C of 2, a higher degree. So just don't, I would say, in general, don't get fooled by the narrative. And the narrative is, be worried about the dollar, run to gold. I don't hate the metals at all whatsoever, but I would just, take it all with a pinch of salt. Okay, here is, because I tell you what, I'll tell you one thing. Right back here at this B wave high in March 2022. You can go back and look at my videos. I was calling this a B wave high, and I was calling that a 3-wave corrective rally, and I was looking for a major decline in wave C, and everybody was calling the death of the dollar again, and everyone was saying that gold was going to go to the moon again. Just be aware that there is such a thing as mass buy-in on certain narratives, and the narratives are dangerous, especially at extremes. Okay, let's move on. Crude oil. The daily count of crude oil. Crude oil, oh crude oil, how crude you have been to me. The spike higher this week had triggered the alternate count, so this will be a series of. This could be a third and a fourth wave as well, so I can't rule that out. Actually, I must put that in as an alternate count. I've got it at the moment. I've got it as a 1-2 pattern. That also could be wave 3 and wave 4. Expecting a final decline in wave 5, but we've got impulsive decline, expanded flat correction, wave 2. I think we're pretty close to topping this out right now. Here you can see on the 4-hour count, we've got this wave 1 down in blue, 3 waves up in wave A, 3 down in wave B, 1, 2, 3, 4, fourth wave triangle, I think, and wave 5 should bring us to complete wave 2. Here's the hourly count: 1, 1, 2, 3, fourth wave triangle, wave 5, probably above $83. Complete that, and then reverse again down into wave 1 of 3. And that is the base case outline scenario here. So once we do top out this wave 2 again, we look for wave 3 down to begin. So wave 1 and 2 should again form a lower high back below $80 again, and we would expect a continuation of that decline down. All right, let's move on. The S&P, pretty much the same. There's a daily count. We've got a 1-2 pattern, and then a 1-2 pattern, and then a 1-2 pattern. So you can see a pretty solid set of stepping down. The idea here, I suppose, is that we are just waiting for that capitulation moment. It hasn't happened yet, but again, we are how quickly it turns from the decline, spiking interest and spiking, that let's say negative sentiment, and then a rally and a complete death in negative sentiment. And now we are, blue skies and plain sailing all the way for stocks. Now they are, it's a long-term asset again. You can buy it and hold it forever. It's always going to go up. Boy, oh boy. Yeah. And that was the same sentiment we were seeing at this wave 2 lower high back in August 22. That was the same sentiment we were seeing in early February this year. Stocks are going on a rally again, and that's the exact same sentiment we're seeing right now. Heaven forbid you should ever notice this, bearish head and shoulders building around that February high. Don't ever look at that. That's not a head and shoulders. This is not the head and shoulders you were looking for. Okay, so the 4-hour count, 3 waves up in wave 2, and now a possible 1-2 decline. Still looking for that acceleration lower, has not occurred just yet. So the hourly count, we have a pretty nice, I think, complex correction here. 3 up in A, and triangle B wave, so A, B, C, D, E, triangle B wave, and then a 5-wave rally in wave C of 2. Topped out just above the 78.6 retracement. Here we are holding a small lower high below that. We'll see how the rest of the day goes. If we get a reversal off that again, we will see next week if that develops into wave 1 down. I'm looking at that B wave low, 39.51. So 39.51 is the level to watch for now. And we will see if wave 1 of 3 breaks that early next week. And that is your outlook for the S&P. We'll see how it goes. There's a lot of, we see how it goes at the moment. Okay, silver, pretty much the same outlook here as in gold. They are pretty much aligned right now. So I would just mention that I don't know, someone's going to beat me up over this in the comments. If you do, you can start typing now. There is a possibility of a sharp decline in an alternate wave 2 here. So if that's wave 1, then we could get a sharp decline in an alternate wave 2, back towards or back below 1975 again. Maybe even down towards $19 again. And there is a even, maybe a more out there suggestion that this whole rally is a 3-wave rally up, and all we are doing here is correcting at a lower high, and then we move even lower again back towards $13 again. That would be a larger wave 2 scenario in black there. So that would be the more bearish outlook here. I'm not advocating that. I'm just pointing it out, seeing as we are at a very extreme high in sentiment right now. An incredibly extreme high in sentiment. So this high in sentiment may produce the very exact equal and opposite result in price action. So I would just keep those two figures in the back of your mind, 1975 and $15, let's say. Okay, now let's move on from that. Nothing to see here. Okay, so this is the more bullish side of the equation here. Still expecting a second wave decline. Still should be quite a sizable decline, back towards about $20. Yeah, we're kind of eking out new highs in this rally, but the gains should be, if there are going to be any, it should be very minimal from here. And I think the fact that we are at such an extreme over bullish sentiment, I think we're going to get punished for this pretty soon in a second wave decline. At what degree, that's up to the market to decide. But I think I'll actually put in that alternate wave 2 here. What degree is this second wave going to be in? Well, that's up to the market to decide. Is it $20, or is it back below 1950 again, or is it back below 15 again? We shall see. Okay. Bitcoin. Right. Bitcoin has not reversed yet. It's still holding at the highs. It's pretty dead in the water at this point. It's possible triangle before a spike in a fifth wave. We'll see about that. At this point in time, I'm expecting the very same thing. We had this commensurate rally in Bitcoin, along with silver, along with gold. It may well have been all fueled by a capital flight out of China, out of Hong Kong. You can see the Hong Kong banking system is about to collapse. Maybe I would suspect that is probably driving it right now. We had it, although I'd say they've probably locked down a lot of those capital flights right now. I would suggest that we are again approaching a high. Again, excessive bullishness in a non-existent so-called asset, but digits, ones and zeros ain't going to feed you when the famine comes. So let's see. Wave C. I'm still going with wave C of 4 on this one. Let's get out to the daily count, and I'll show you why. This is the fourth wave scenario that I've been kind of toying with, and you can see a very, very prominent bearish divergence between price and momentum right now. So this could go negative pretty soon. So let's see if we top out wave 4 and fall in wave 5. That's a longer term call on that one. It may not happen for a few weeks yet. NASDAQ 4 hour. I think I've been following this C wave. It's a triple combination, probably. So 3 up in A, 3 down in B, and then 3 up in wave C. Don't want to see a break of that fourth wave high. So that's 13,700, 13,700, 13,720. Possibility that we are reversing this week. If we get down to the hourly count, very small, distinctive 5-wave pattern lower. We're holding a lower high. Let's see if that holds today. We'll know tonight, when I do tonight's update. If that lower high holds, then we should be signaling a possible decline next week to begin a larger wave 3 down, or a wave 1 of 3 down. Anyway, along with the rest of the stock market. Okay, that does it. This is Easter weekend, as people like to call it. It's Resurrection weekend. It's the weekend, Passover weekend, where the Passover lamb was slain outside the walls of Jerusalem. And all he asked, God in the flesh, dying on a cross so that we don't have to. He took your sin to the cross and paid for it. And you don't have to pay for it eternally if you just accept it. And say, thank you, Father in heaven. I accept the sacrifice that you made on the cross that day as a propitiation for my sins, as paying off my sin. Thank you for that. And I'm looking forward to seeing you in heaven. Okay. I could go into a big missive about it, but the information is all there online. Just go and read Bible app. Go online. You don't even have to get an app. Go online, read Isaiah 53, read Psalm 22, read, any number of, read Exodus 11 and 12. The final plague. The final plague was the death of the firstborn. And in order not to be counted in that death, you were to put the blood of the lamb on your doorposts. Does that ring any bells with you? The death of the firstborn and the blood on the doorpost. The doorpost is actually the letter Dalet. And for you, my Hebrew friends, my Jewish friends, the letter Dalet is the door. It's the way. It's the way of life. Dalet. And Jesus said, I am the way, the truth, the life. And he said to you, to those who believe, I leave a door open. He's the door. He's the sheep's gate. And he's the scapegoat. He is the sin offering. And he made that sin offering for you. And that's it. See you in heaven. Okay, for those who believe. On to tonight. I'll be back for tonight's update. Thank you for all who have listened to my ramblings. And if you want more written ramblings, come tonight and you get my nightly update charts. And that is that. I will see you on the flip side. Bye-bye.